Welcome to Front Range Facts. This is Anthony Meisner.
And this is Jim Merrion.
Thank you so much for joining us today. We're going to get right into the national market here, and Jim's going to break down what's going on in the real estate industry for us.
Yeah, thanks, Anthony. We're here in December, and so we just wanted to kind of go over with some of the high-level ideas essentially kicking around the marketplace and talk a little bit about what the outlook for 2021 looks like on a macro level. And, interest rates have definitely played a strong part in our market. We're below, we're at about 2.7% interest rates or so right now, which is pretty darn amazing. So, the Fed met recently, and they basically decided not to make any change to the Fed fund rate. And they also broadcast that they're really not going to touch it until at least 2023 at the earliest. So that's another 2 years of really strong positive lending, that is going to continue to push this market forward. We have this whole stimulus thing that may or may not happen, but basically, they're kicking around the idea of $750 billion to $1 trillion in stimulus. And Congress has, several guns to their head, including the fact there's a government shutdown headed this way. The holidays are coming up, so they're going on break, I think, today after the day's over. And then we've got two, senators trying to win election in Georgia. So both parties are trying to make it seem like they care for the common man. So we'll see what happens. Standard & Poor global ratings. Basically they looked at what the effect of different stimulus ideas would be. And I think it's interesting to see just how you can equate a specific dollar level to when the GDP is going to recover. And, you go big or go home. If you do that, you do like a $1.5 trillion package, then you're going to get back to pre-pandemic GDP levels essentially by the second quarter, which would be amazing. But, we're looking at right now, something around the $1 trillion mark. So that would bring us back to current levels by the third quarter of next year. But, if we do not get that passed, and if this continues to go on, this whole recession will continue for another year, if not longer. So get to it, Congress people. We need to have some help here. And then Ed Pinto, who used to be Fannie Mae's chief credit officer, had an interview with Fortune magazine, and he predicts that home prices are going to at least go up for another 6 months, if not a year. And, Anthony, you and I can certainly see that in the data. We're going to be showing the folks at home today that Colorado on a micro level is definitely got wind in its sails for the whole next year. So very much in line with kind of what we're seeing locally.
Yeah, I mean, it's pretty amazing what's going on in the housing market, being that the last recession seemed to be caused by the housing market, and the housing market now is dragging the U.S. economy along behind it in force. So it is pretty interesting to watch, and we're seeing a lot of good information here. I mean, Redfin released a report recently where in 2021's housing market, there's a bunch of really obvious changes, right? So one of the biggest things that shocked Jim and I when we read it was the fact that we're already having a banner year and 5% increase in total volume for the market in 2020. And they're expecting an additional 10% rise in 2021. And this has to be because of a couple of things. Number one, we're talking about record low interest rates across the country, right? I mean, we're talking about, I think it's like 40-year lows in interest rates right now since the 70s, something like that. And then the other things that really are affecting this are just the fact that the home ownership rate is rising so rapidly. It says here by the end of 2021, the American home ownership rate should reach 70%, which is the first time since 2005. So
yeah, and I think, just, to put that in perspective, Anthony, when you look at about 2010, 2011, home ownership, because of all the foreclosures and stuff, had dropped to about 63, 64%.
Yeah,
so, a pretty sizable chunk of people moved out of the market. So to see 70%, that's pretty much scraping the top record. 2005 was the high water mark, I think, in all of time for home ownership. And we're bumping right up against that by the end of next year. So it's awesome to see so many people being a homeowner, taking control of kind of their financial future and not being bound by the whims of, the landlord relationship. So it's great.
absolutely.
Yeah. And, Redfin does think that interest rates will start to go up. So we're at like 2.6, 2.7 right now. So they think that sometime in the tail end of next year, we'll see them start to go back up to about 3%. But 2021 is going to see more home sales than any year since 2006. and they're going to see more new homes built any year than since 2006. And I think just the one thing that people should not be concerned about is 2006, kind of a four-letter word in the real estate business, because that's kind of when we had all that stuff happen. But it was all about giving money too easily to people. And right now we've got very tight lending requirements. I think the average FICO score right now is about 750 for the average borrower. So the very strong credit. People are not just making up income, by writing it on a piece of, scrap paper and showing it to, their lender. And it's also the super tight inventory, which we're going to dive into soon. There's no homes for sale, and it's not going to change anytime soon.
Absolutely. The other thing to keep in mind is when we started seeing people get a little gun shy on buying homes in 2019, those interest rates were pushing over 4%. So the fact that we're going to be for a couple of years around 3%, that really goes to show just how far your money is going to go. And it's going to allow a lot of people to trade up. It's going to allow a lot of people to pull equity and use it to remodel. And it's just going to really increase that standard of living here in Colorado and really put a lot of their hands back in the a lot of your cards back in the hands of people who may have not owned before, which is why homeownerships are rising, because it's going to be cheaper to buy than it will be to rent in a lot of cases. And so these rates are really having a lot of effects on the marketplace, which we don't always think about.
Yeah.
Tim, what's going on with NAR? You found this cool study.
Well, this kind of dovetails with what Redfin was talking about a little bit. But once Redfin started talking about sales going up 10% next year, I was like, well, wait a second. That's got to be really freaking amazing, because I think we're already in record territory in some ways. And so, yeah, I put up this kind of trend report. This was created March 2nd, 2020 by Statista. And so, their projection of where the sales are in 2020 is pre-pandemic craziness. So, it's going to be about 5.5 million that they're projecting in this thing. But what's important, I think, to show is that NAR has been looking at the last 4 months of sales data, and saw in September the fourth consecutive month of, annual growth. And, basically September ended up 21% higher in sales than it did in 2019 in September. And so that pace for the second half of 2020 is essentially a pace of about 6.5 million homes for sale that are going to sell annually. So if that's the case, if 2021 does kind of, hit a 10% increase in sales, we're looking at somewhere in the sixes of, somewhere in 6 point some million homes for sale, anywhere from 6 million to 6.5 million. So that puts us at that 2006 level, way beyond anything we've seen since, that whole crash that we had. So expect a banner year in real estate, really, I think is what we all should expect.
Absolutely. What's going on with showings, Jim?
So, Anthony, every month we like to show what our friends over at Showing Time track. Showing Time is the showing coordinator for many, many real estate companies. I'd say 75% of all showings are scheduled through them nationwide. And so it's a leading indicator for sales, right? So the activity today generates sales within the next 90 days typically. And October is their latest month of data that they released. And overall, we're seeing about 61% increase in showing activity over October of last year. And in the Western region, 65% increase in showing activity, which is, tied basically with the Northeast region as far as, amount of activity. So we're kicking ass compared to 2019. And, if this is a leading indicator as it normally is, then holy cow, we've got some fun ahead of us.
Yeah, we're going to really break that down in the Colorado market here and show you what's going on. Don't forget, we always want to do our shameless self-promotion so you know who we are. And we always avoid that at the beginning because you just came here for the information. So
we're too shy. We're too shy. That's why.
I'm Anthony with Land Title. I work in the Boulder market. You can always catch me on my cell phone at 303-968-9868 or email me at ameisner@ltgc.com.
And I'm Jim Merrion, Realtor with Coldwell Banker here in Boulder. And my phone number is 303-548-2333. 0243. You can always shoot me an email to jim@ourcoloradohomes.com. Or if you'd like to email Anthony and I together, you can email us at frontrangefacts@gmail.com. And you can always get a copy of our slide deck if you'd like. We do signed autographs on every third Tuesday of the month. And don't forget to check out our other podcasts we do from time to time. Get Real with Blockchain, which is our real estate podcast focused on blockchain technologies, which is available on iTunes, Spotify, and wherever podcasts are sold.
Okay, so we're going to get right back into our normal structure. So we always start with the national market. We're going to break it down next for you in the Colorado market, and then we'll hit all the local stuff across the Front Range. So getting right in here into the Colorado news, Northern Colorado's inventory has decreased by basically 47% compared to last year. And give or take the market, that's kind of what we're seeing across pretty much everywhere in Colorado. It's pretty incredible. The other thing, that average home construction cost has now increased by 17% due to shortages of lumber, COVID, wildfires, anything you name it right now is creating supply problems. So just seeing kind of some of these impacts with really low inventory, these increasing costs, we're seeing just record appreciation across Colorado. And we're going to get into that a little bit more later for you and just kind of show how extreme that really is going to be. Jim, what else is going on in Colorado here?
Well, Anthony, I think one thing that has been pretty obvious with contractors, anyone who's had work done this year in their home, it's just very hard to get them to be scheduled on time. And it's not just necessarily getting them to, show up the day they're supposed to. It's the fact that their supplies aren't there, right? And so you've got, severe shortages in supply chain and different things. I had my deck redone this year, and we had a 2-month delay in getting some parts sent to us. So we've got shortages in the supply chain. It's also increased the cost by 17% because of that. So sale closings have also increased across the state by 36%, and pending sales contracts are right up with it at 39% as well. And one thing, Anthony, that we have talked about consistently in our podcast is just the fact that in a market like Colorado, where you have consistent appreciation, since 1990, I think we've averaged about 5.7% appreciation per year, and that's averaged out. So some years are maybe below that number. Other years, 2015 was about a 20% increase, in prices. So it averages out though pretty strong. And what that results in is huge equity for the average Coloradan, right? So 80% of Coloradans, have at least 20% equity in their homes along the Front Range, and 2 out of 5 homeowners have more than 50% equity. So we're not having any foreclosures on the horizon. A, there's no inventory, and B, if someone's really desperate, they just sell their home. They're not going to need to have it foreclosed on. And so that's really resulted in also that lack of inventory has resulted in, Redfin, which is a nationwide brokerage, looking at all their markets and seeing Denver as the second hottest market in the nation because 66% of their buyers are entering into bidding wars in November, which is for November is crazy. For any time of year is pretty damn crazy, but to see it in November is wow.
I mean, I've bought every house I've ever purchased in November because that's when the market's the easiest to go as buyer, right?
Yeah.
So that being said, this is just extreme. It is pretty interesting to see just kind of what's going on and just how COVID really threw a wrench into things and just completely changed people's buying behavior. And here's another slide from Showing Time where we really have just tracked last year's information versus this year as far as showing traffic. And like Jim said earlier, this is a leading indicator as to what's going forward. So the blue line here, if you're paying attention with us on video, it is really trending kind of what happened last year, right? So then the other line with being this big valley coming out of the shutdown and, the lack of showings and everything else that kind of happened here in Colorado. And then the recovery since then, starting in really, early June, we've seen nothing but just huge increases of somewhere between 10, 20% more showings than in years past. Plus, the thing that this doesn't even take into consideration is that the fear of people going into homes is really limiting the amount of homes they want to see. So they're doing their due diligence ahead of time. And so with the increased amount of showing traffic, like even today, it's up 9% from where it was a year ago. And people are going to see less homes per offer they're making. So what this just means is there's just so much buyer demand in the marketplace that we're seeing. And we really we'll probably continue to see this all the way through the spring, right? This isn't going to let up anytime soon.
No, and that's one thing I think, Anthony, it's just really important to point out to people who aren't aware of it that, these 3D tours that we're all doing nowadays, the investment in more drone photography and just to give people a better rounded picture so that we don't have the showing traffic, it's what it's designed for. So who really knows what that true number is? It's kind of something we can't really track with current technology.
It is impressive, especially with all of the layouts and the blueprints type stuff you guys are doing. And just the fact that you're doing everything you can to limit showing traffic and we're still having these increases is amazing.
Yeah. So let's look at the statewide picture a little bit, Anthony. What's some of the big takeaways on a statewide level in the single family market?
Okay, so if you're comparing 2019 to current, the year over year change, there's some really big takeaways to take away here. Under contracts are through the roof. In November, we were up another 21% again. Year to date, we've completely surpassed where we were in 2019, which if we talked about this in March or April, everyone would have thought we've been insane saying, yeah, we have 10% additional under contracts compared to a year ago. Like, kind of ridiculous. Sold numbers are up 8% across the state and detached. The other part that I think is a huge takeaway here, there's a couple of takeaways. Year over year, the average sales price is up 21% for a November. We went from under 500 to 592, right? These numbers are extreme, and that's really just showing the amount of demand that people have and just how much they're putting into home ownership and how much, having the home that's right for you right now means a lot, right? I mean, you got people that need 2 home offices that have never had to have a home office. You have kids at home from school, and it's really changing the consumer behavior. What that's really doing, we went from 2.5 months of inventory, which was already a seller's market, to 0.9 months of inventory, down 64%. And what that is really going to do is create a huge amount of pressure on buyers from here all the way through the spring that there's really no way to recover from. And we'll talk a little bit more about that in a minute. If you go over to the townhouse condo market, the attached units, there's just been this big move away from the city centers. But at the same time, just because people would like to be in the suburbs and in a bigger house because they have to be home more, there's a lot of renters that have taken action and gone in and bought some of these condos and townhouses that you would have thought it would have been at a deal at the time, but there's so much demand for home ownership that the average sales price in condo townhouse across the state is up 14%. Who would have thought, right? This is just crazy. And you look at under contracts, you look at pendings, it's all kind of the same thing. Inventory levels are down half, right? 50% instead of 60%. And we're, 1.3 months. So we're in these incredible sellers markets right now. If you're trying to retire and get out of Colorado, I guess this is a good time to do that.
who would do that?
But who would do that? It's a wonderful place to live. Don't forget, I'm Anthony with Land Title. You can always catch me on my cell phone if you have any questions or want to get to know us better. You definitely shoot us an email at the podcast, frontrangefacts@gmail.com, or get me on my cell phone at 303-968-9868.
And I'm Jim Merrion, realtor with Coldwell Banker Real Estate here in Boulder. You can call me at 303-548-0243 and shoot me an email at jim@ourcoloradohomes.com. And one thing also Anthony and I would both like to invite you to is we are hosting a blood drive on January 6th. So feel free to reach out to us, but from 11 a.m. to 3 p.m. in Boulder, right at the same building Land Title's located in, we're going to be hosting a blood drive since there's been about 1,500 blood drives that have canceled due to businesses shutting down, schools shutting down. So please do your part and help out. Reach out to us and we'd be happy to sign you up.
Thanks for bringing that up. That's a big deal. We just wanted to be able to give back over the season, and it's definitely a time where they're definitely not getting enough donations. So we're doing what we can here. We're going to get over into the Denver metro market now, and I think this is something that, a little more extreme than most markets across Colorado. They hit a 10-year low for the month of November, down to 3,400 active listings. It's the lowest that we've seen pretty much since we've started keeping track in the MLS. And that the important part about that is not only is that a record low for 10 years, but population increases have driven up the volume so much that these are just really unprecedented times as far as the inventory shortage.
I want to say that we've probably seen about 1 million more people in the state, really since about 2010 or so. So it's significant that it's
and probably half of that's in the metro area. So it really does go to show just how incredible that is. Another big takeaway here that I wanted to point out before we move into some of the more nitty-gritty stuff is just the fact that the average detached single-family home went up $80,000 this year. You guys own a house. not only do you have the ability to trade up and put a lot of money down on something that you might really want, you can refinance right now. You can get a lot out of that, right? You can lower your payments and all these other fun things that are going on. But look at the wealth creation in Colorado that's happening right now. It's just amazing.
I think what we're saying is just quit your job. The house is going to pay the bills for you. Just kick back, relax. You don't have a thing to worry about.
Exactly. Why would you ever care, right? You don't need to work anymore. The other thing that is a really important takeaway in Metro is just the exodus from the city center has created a ton of outerlying market just increase in demand, right? So when you're looking at a buyer demand, we look at the average days in the MLS. And so when you look at Elbert County, Adams County, Jefferson County, the outerlying ring of the metro area, that move to the suburbs is just overwhelming. When we were talking about it, we look at 16 days average in the MLS. That means it takes less than 2 weeks for a house to go under contract, or right at 2 weeks, right? And then average days in Adams County and Jefferson County. I mean, these counties are so much lower than other counties in the area, purely because there's a little bit more space out there, and that consumer is really looking for life in the suburbs right now, and especially with as many millennials that live in the Denver metro area, that lack of things to do downtown. It's like, why am I living here and paying all this rent or paying all this these homes that are right downtown when they may not even have to commute to work? So
Right.
really a change in the buyer behavior.
Yeah.
This one,
And for the Denver metro area, then the combined, market too, Anthony, the year-over-year change just in active inventory has been pretty remarkable to see such a drop. I don't know, the big question is, are we going to get better, at all, next year?
yeah. I mean, I think we'll probably see very traditional amounts of inventory come on the market when it normally does. But the problem is, with the amount of demand, it's still going to turn over faster than usual. So you can really see it here in this graph. In the green here, that just goes to show you kind of where active inventory levels are. Well, they're way below where they were a year ago, where they're way below where they were 2 years ago, and they're continuing to drop. And there's so much demand. The only reason that we don't have more under contracts and solds is because there's not enough homes on the market to support that, right? If that inventory level was double, we'd just be continuing to rise because there's so much demand in the marketplace. And so many people want to move to Colorado right now. I mean, if you can't really do a lot, you might as well spend more time outdoors because of COVID. And there's a lot of that going on here in Colorado in the marketplace.
Yeah, they're coming from all over the country, but because of our price point, it's more coasts. I think that we're going to see stuff, and just more urban to urban kind of moves to the Denver area from another well-to-do urban area.
Jim, you want to talk about the month supply of inventory here?
Yeah, so we don't have any. Just looking at like Broomfield County, for example, I mean, it has 0.4 months of inventory, which is 10 days ish, kind of thing. So no, it's 8, 9, it's crazy. Put the home on the market in Broomfield, expected to go under contract certainly by the following weekend, and so overall though, in the metro area, to see a 0.7 months of inventory, which this time last year we were at about 1.4 months of inventory. And keep in mind that a balanced market historically has been defined as having 6 months of inventory. 6 months is kind of where buyers and sellers traditionally have been said to each hold about equal cards in a relationship, and makes it kind of a healthy thing. We have not seen that since 2010. And, last year we were laughing about how little inventory we had and how quick the inventory was moving. But now we're in this whole realm that you just defy belief in a lot of ways to see 0.7 months of inventory. So essentially, if nothing else came on the market, everything would be gone from the market in about 21 days or so. So that's a voracious appetite for very little food on the table.
Yeah, and being that that's the supply line, let's take a look at the buyer side of this. If you're looking at basic economics, that's your supply, this is your demand, right? So this is how much appetite buyers have for the market. Just like Jim said, it just keeps shrinking and shrinking and shrinking supply. The craziest part about this is that demand level is not letting up. If you look at from like April to now, there is just as much demand for the last 9 straight months. Right? This never happens this time of year. Usually we have this huge kind of steam that's let out of the market into January, and then boom, off to the races into the springtime, right? And that is giving zero relief to the real estate market, which usually allows those inventory levels to come back up and recover a little bit before we're off to the races. So expect, if you're going to be looking at buying or selling homes in the spring, if you're trying to sell your home and you don't have to replace it, awesome. Otherwise, being on the buy side of this part is going to be a little tough. So you really need to work to position yourself to just kind of capitalize on that, because getting under contract, like we've talked about, multiple offers on houses in November is going to create a lot of demand in the spring. So act early if possible, because it's definitely one of those years where we're going to see a frenzy out there for sure.
Yeah.
We like to talk a little bit by price point too here. Jim, what was one of your biggest takeaways about our market as far as actives and solds?
I think it's like, both ends of the market have some really strong points to make, right? Like the luxury end, back when the market first crashed in the recession, Anthony, you and I were really negative on the high end because, Wells Fargo had basically shut off, Wells Fargo is the biggest lender in the country, or one of the top, and they shut off jumbo loans, right? And all these other, lenders completely hit the brakes on their jumbo loan requirements. So those big, huge, massive loans that would purchase those things, it dried up, overnight. But it was a short-term type of, suppressant to the whole thing. And now we've just seen an explosion in the luxury end, right? And then conversely, on the low end, because prices have gone up so much, essentially we don't have the low end that we used to have in the market. So the $0 to $400,000 purchases are just, it's hard to find, stuff in that price point nowadays. And, so what we're seeing, a huge change in the low end, huge change in the high end, much greater demand in the high end, almost no inventory in the low end to even have a demand. So the product isn't there, to a large degree. And so it's that whole middle that, has seen just, very nice, healthy increase, in prices and in also just sales activity.
Yeah, I mean, if you pretty much look from 800,000 to 400,000, that's the bulk of the market. That's where your median households can afford to buy. That's where they're kind of trading up, and, first-time home buyers are buying into. And when we're seeing just, 40 to 60% drops in actives on the market, and sales are up in November, 6 to 800,000 was up 93% compared to a year ago. Like, these numbers are just completely insane. And that's all being driven by just the forces of everything related to COVID and these low interest rates and everything else going on. So if we go over to kind of the supply line and the demand, there's a lot of demand among all price ranges. The fact that $3+ million homes in the Denver metro are only sitting on the market for 35 days on average right now, unreal, right? All we've done is see the supply line shrink in every single price point across the market. And then you get over to 400,000, or call it 600 to 300,000, and you're at 0.4 months of inventory, where you've got a couple weeks on the market. They're burning through them as fast as they can get inventory in. People are just trade, right? You got to be positioned to move on to the next house. And there's a lot of reason to be able to trade up right now. So I think kind of keep that in mind. Even though there's a lot going on and it's kind of difficult to buy a home, you have so much power as a seller that if you can take advantage of that, capitalize on a lot of this equity, it's a really good time to go out and find another home and buy up, because the higher in price point you go, the more demand, or the more ability you have to really negotiate as a buyer. So some of these people that are in $1 million and they can trade to 2, financing's cheap, it's a good time to do it. You might be able to actually, negotiate up. So if you're trading from 400 to 600 or 400 to 800, maybe a different story. It's going to be tough, but I think it's definitely worth doing because your payments are going to be so low, right? If you haven't refinanced yet, I think half the earth is refinanced in the last year because of the record interest rate.
It's up 120%,
Yeah, it's pretty crazy. So.
And just, anecdotally, to follow on what you're saying, Anthony, I mean, the traditional person is always called up saying, I'm looking for a 3-bed, 2-bath, and they always say it like they're the first person to ever think about something like that, but, that's a pretty consistent thing when you're talking to people, you expect a lot of that. And this year, just anecdotally, I can't believe how many people are like, I need at least 4 beds, the bathroom thing, they're flexible on, right? But everybody now is trying to have that at least one extra room. And even just, I've been amazed by how many just couples, married couples, who don't have any kids are still asking for a 4-bed, 2-bath because they want the master bedroom, they want a guest room, and then they want an office for his and her, so It's
Something
really
where you're like,
causing some changes in our marketplace.
absolutely. Very rarely you're like, well, the kids need a place to go to school. I need an office. My spouse needs an office. Like, well, there's 3 rooms. How many bedrooms do we have? How many?
Yeah.
I mean, it's just crazy. People need more space than they ever had before. So we'll see how that interacts in the marketplace over the next year or two. But during COVID, it is what it is. That's what people seem to need. So people are definitely acting on their needs at this
Yeah.
point. Don't forget, if you want to reach out to us, you can always catch us at frontrangefacts@gmail.com. My name is Anthony Meisner. I work with Land Title Guaranteed Company. My cell is 303-968-9868.
And again, I'm Jim Merrion with Coldwell Banker here in Boulder at 303-548-0243, or you can reach me at jim@ourcoloradohomes.com. And Anthony and I would like to just remind you one more time, January 6th, feel free to reach out to us if you'd like to help donate some blood in Boulder at, basically the office in Land Title at Canyon and 26th, 11 to 3. We are, hoping that you guys can come out and help pitch in.
All right, so let's go to our friends up north in Larimer County. Lots of the same market behavior is happening across all of these markets, but some big extreme swings up in Larimer County. The month's supply of inventory up there is down to a raging 1. 60% below where it was before, a little bit more inventory up there. So they've seen a huge increase in their sales, 11.4% more sales this year than in years past. They've seen a little bit less appreciation in that market, probably because they had more inventory to gobble up before they have to get to that point where, you're in multiple offers and bidding wars, but still a healthy 7% for the single family homes up there. The townhouse condo market still doing incredibly well as well. 6% year to date increase in the appreciation in the average home up there, and 10% additional sales. So no complaints. Definitely, Colorado Front Range market's doing very well.
Well, they deserve the gold star for the most normal market in the Front Range, I think,
The most normal, is that a thing right now?
I don't know, but because you're right. They were higher appreciation last year at like 9% or so, and the year before 9% or so, and the fact that they do have a little bit more wiggle room with the inventory is certainly helping keep it a little more stabilized and normal.
Absolutely. Then you get over to our friends in Weld County, and Weld County is doing, about the same thing. They're down to 1.2 months of inventory, which really means super strong sellers market. We've got average sales price increasing right around the same 7%, attached units, 5% increase, healthy markets, right? These are really good, healthy numbers, right? This is the kind of stuff we like to see year over year, all the time. Only problem being half of the inventory is gone again, right? 1.2 months of inventory in both attached and detached units in Weld County, which is going to put a lot of pressure on them going into 2021.
Yeah. But there is a decent amount of new construction going in Weld, so hopefully, and that's what Larimer's too has had. The new construction has definitely been helping to keep the pressure off the inventory levels a little bit.
Yeah, and it's definitely northern Colorado is a little bit more affordable than the metro area, which you're really seeing that in southwest Weld County, where there's a lot of people moving out to that Frederick, Firestone, Dacono area, or out even to the north of Brighton, and all these places where there's a lot of growth, where people are actually commuting into the metro area for work or now working at home. But that's kind of the idea. Eventually, they'll have to. So healthy growth in those counties. I think it's definitely promising to see good growth, good affordability, kind of moving forward. It's a healthy real estate market for sure.
Yeah.
If you go over into Boulder County, you kind of have the opposite situation where they can't build anything. And we're really just seeing where we had a lot of high priced inventory on the market. Even that has been gobbled up at this point, right? Boulder City had way more inventory than anywhere else in the county. And everywhere in the county is seeing the same thing that's happened in Metro, same thing that's happened up in our friends to the north in Larimer and Weld, where, we're down 40% in active inventory across the county as a whole. When you look at it on a combined level, 5% increase in average sales price year over year. It's a little lower, but when we were looking at it last month, it was 21%. So composition of sales means a lot in Boulder County. You have a lot of luxury. You have these multi-million dollar homes. The average home price right now for all of Boulder County always takes the record at $640. And that's all units, all types, everything combined. If you look at the city of Boulder, detached single family home is now 1.2 million average. So very different marketplace here in Boulder County. So we wanted to look at this by price point slide again for you here for Boulder County, since Jim and I, work here and spend a lot of time in Boulder County. It's definitely one of those we favor a little bit, but it is interesting to watch this. You kind of look by price range, and just like the metro area, that middle of the price, or the middle of the price bands, is where you're seeing very little inventory. But in Boulder County, you're seeing that low inventory change all the way up into almost 2 million, right? The 1.5 to 2 million is acting very similar to what's going on at 800,000. There's just no inventory and a lot of demand here. We've seen just a ton of out-of-state money come into the luxury market. I mean, 5 sales just last month at 3+ million, 2.5 to 3 million, 5 sales, right? It just continues to snowball in the luxury market. We're becoming, hopefully not, but it is kind of what it is, where you're seeing a lot of out of state, out of country money come here like you would in an Aspen market. It's a pretty desirable place to be as far as the high end. So it's definitely shifting market conditions in all of Boulder County, but lots going on, right? Those median income homes are just flying off the handle, just like we've seen them everywhere else in the state. If you
Well,
look,
we're a bucket list item, right? The Boulder areas, just heck, I mean, the Front Range is a bucket list for many people, and their jobs have always rooted them in a certain place geographically elsewhere, and now they've got permission to kind of be free and do whatever they want, and so they're flocking to places, like here, or in the mountain communities that are popular, or they're going to other places that they feel are somewhere that's always been near dear to their heart, and so we're one of those, fortunately.
yeah, we're very fortunate for that. If you look at inventory, you can really see this change. If you look at 3 million plus in Boulder County, normally we're talking 30 months of inventory. About 3 months ago, we're down to 15 months of inventory. Now that financing has come back, now that people have really decided, oh, I'm going to have a whole nother year at home, I'll take my year in Boulder, right? I'm going to leave Silicon Valley. I'm going to leave the East Coast, right? I'm going to come to, somewhere in the middle where, outside of the wildfires, it seems to look pretty good most of the time. So
Yeah.
those inventory levels aren't quite as low as Denver, right? If you look at the 800 to 400 range, we're at 0.7 instead of 0.4, but that doesn't really offer a lot of reprieve for buyers, right? It's just kind of is what it is at this point.
Yeah.
And the market, all of this stuff is just really showing how much buyer demand we have out there, and it's just not going away, right? And all price ranges.
Yeah, I know it's moving quick, and we'll continue to do so because we just don't have any reason why the inventory will increase. We have no construction. So
Yeah. What about in El Paso County, down with our friends in the
yeah,
Springs?
friends in the spring. So we've got some just amazing appreciation once again from those guys. Colorado Springs. We started this podcast like in 2018, and every year we report in the Springs at the end of the year they're the winners, for the appreciation percentage. And sure enough, here it looks like they're going to wrap up the year is just rock solid. The single family appreciation right now, year over year, looking at 18.5%. For single family median sale price, and then for townhomes and condos, a 14.5% median sale price increase. Just holy moly, man. I mean, the new listings, are down a little bit, 5.5% on the single family, but they're actually up a little bit on the townhomes. So that's one of the few places that you're seeing some growth there. And, they've been doing a lot of build out for affordable, more homes there. So you're seeing some great stuff there. And just to see, the sold listings, 25% increase from, over, November of last year to November of this year, 25% increase in sold listings, single family, and a 35% increase sold listings for townhomes and condos. There's a lot of demand to get to Colorado Springs.
There's a ton of demand. We were talking about this just since the time we started this podcast. That market has appreciated to almost $200,000.
Yeah, and I mean, just look at the biggest striking thing, of course, is just the inventory, right? Like, we've been everywhere we've been talking about is like down 30%, 40%, 50. We're at a 61.5% decrease of inventory of single family homes, and almost a 60% decrease of inventory of townhomes and condos. It's crazy. We have to get new construction. There just has to be more of that in the state because there's just nothing to do other than appreciate the current inventory stock otherwise.
Absolutely. I mean, they were already in El Paso County where everybody else has come to this year, right, in their inventory levels. So the fact that they could go that much lower shows you that there is not a floor to this right now. This is going to continue to happen across the state into the spring. So definitely hang on there, guys, because
And Anthony, what's the other thing we learned about El Paso? It's going to probably exceed Denver County at the end of next year as far as population goes. So El Paso County is going to be the most populous county in the state by the end of next year. So you can't tell me this slide is going to be any different next year as far as price increases and things like that.
absolutely. I mean, there's no stopping it now.
Yeah.
All right. Well, we just wanted to say thank you so much for joining us today. We appreciate you sticking in there with us all the way through the podcast. I'm Anthony Meisner with Land Title. Thank you from my heart. My phone number, if you would like to talk to me about anything in this podcast or anything market related, is 303-968-9868, or you can reach me at ameisner@ltgc.com.
And happy holidays to everybody out there. We really thank you again for spending another year with us here doing our podcasts. I'm Jim Merrion with Coldwell Banker, a little old realtor, and my phone number is 303-548-0243, and I can be reached at jim@ourcoloradohomes.com. And please remember, on January 6th from 11 a.m. to 3 p.m., feel free to reach out to Anthony or I if you'd like to take part in our blood drive that we're doing in Boulder. We'd love to have you out.
Don't forget, if you want to check into our blockchain podcast, reach out to us about that, or just check out Get Real with Blockchain anywhere you get your podcasts.
Happy holidays, everybody.
Have a great day.